analysis is Erin Swenlin of DecisionPoint.com. Welcome back to Traders Corner, Erin.
Thank you so much. I was getting a little worried there about sharing my screen, and I do apologize for popping my webcam in there. That was the last thing I wanted to do today, was show you myself.
Hey, get an extra smile from you was a nice gift.
Well, thank you so much. So today I'm going to be talking about industry group analysis and how we use that to drill down to find the best investments. So really what we do is regular overall market analysis. We have a report called the DecisionPoint Alert. We publish it every market day, and it gives you kind of the outline of what's going on in the market, Bitcoin, et cetera. But the other report that I do is called DecisionPoint Diamonds, and we use that to give out those stocks that we believe will ride the trend of what we're talking about in the DecisionPoint Alert. So I will tell you, as a stock picker, it's been certainly a difficult time, to say the least, with this bear market. But DecisionPoint Diamonds have been doing pretty well. We've beaten the SPY quite a few times over the past 8 weeks. And so I'm feeling pretty good. But what I found was that I use scans, and my scans were just simply not turning anything up. And mainly because, you know, there weren't stocks with a 20-day EMA over the 50-day EMA, or a 50 over the 200, because every stock had been just so beat down. So my scans were really just not producing what I needed to publish that report. So as part of that, I started to dabble in industry group analysis, and I have found that to be just an excellent way to find those pockets of strength, to find those stocks that will be winners even when the market is a loser. So that's what I want to discuss with you today. Depending on how much time I have, it looks like you guys are running a little late, which is fine. Usually I do some symbol requests at the end. We may not have time for that, but I will show you quite a few stocks I'm going to be looking at. A lot of this is going to be brand new to me because every time I go in, industry groups look different. So we'll just move through this and get started. All right, so you already talked about me, so I don't really think I need to go through this that much more. So I do say that I have over 22 years studying the markets. It's actually probably more like 35 or 40. I started looking at the market with my father, Carl Swenlin, back when I was in junior high and high school. But I didn't really, you know, start studying it until about 25 years ago. So that's when I really started to learn more about the indicators, how they work, and really, you know, trying to move what our indicators were into more of a the opportunity to do some stock picking. Carl does not do that. He doesn't like that. He's stayed away from that. But when we broke away from stockcharts.com, we decided that we needed to have that particular piece of the puzzle, if you will. So I'm going to be showing you a lot on stockcharts.com. I'm affiliated with them, but we have our own company, DecisionPoint.com. So, but a lot of the tools that I use pretty much primarily are on stockcharts.com. But what I'm going to show you today, you can do as a free member of stockcharts.com. So you do not have to be a member in order to follow this process I'm going to be showing you. And yes, I am host of the Decision Point show. Chartwise Women, I'm sorry to say, has gone on hiatus. We're not doing that one anymore, but the Decision Point show has actually morphed into the Decision Point trading room. And we hold that on Mondays, just like I was doing my regular trading room, but it wasn't affiliated with Stock Charts. Now Stock Charts has picked that up on Stock Charts TV, so you can see our trading room on YouTube, which is kind of a nice little addition. So industry groups, I'm not going to do a bunch of charts because I think PowerPoint slides, I should say, because I think really the most that you learn is going to be from, you know, seeing it in action. So that's exactly what I'm going to be doing today. I find slides a little boring. Sorry to everybody else who went before me. All right, so industry groups. I think most of you are familiar with them, but each sector is made up of various industries and industry groups. And studying those within stronger sectors is really going to give you that advantage just right up front. And as I said, I use my DecisionPoint scans, and when I do get some results, I will usually look at that stock. And then if I like the stock, but I'm not completely happy with the stock, I look at what industry group it's in, and I go over to the industry group summary, and then I start drilling down and finding those stocks that are outperforming that industry group. And again, I'm going to show you how to do that. It's not too difficult. And then we find those stocks. So that's pretty much what we're going to do today. I don't think I need to do more PowerPoint slides. But if you are interested in more information on how to do this, definitely attend our DecisionPoint trading room on Mondays. Like I said, it's free, and it gives you a chance to see this particular process in action. All right, so let's just go ahead and move right on into the DecisionPoint website, and then I'll go on to Stock Charts website. But this is us. I wanted to give you a little bit more about me as far as what we do, but this is our homepage. And as I said, DecisionPoint Alert, that's going to give you your assessment of the markets in general. That includes yields, Bitcoin, crude oil, bonds, etc. And then we do these diamonds in the rough stocks that basically are supposed to kind of follow the trend that we find here in the DecisionPoint Alert. If you want to sign up for our trading room, right here is where you can do that. You can attend live, or as I said, Stock Charts TV does put them on YouTube, but you don't see those for about 4 hours after we record, and the market is mostly closed. So it's great if you can come and attend live for that. And then I'm just going to show you our price points really quick, because I want to do that up front, because nobody can ever believe how low they are, and it is professional grade, I guarantee you that. And they're just great products, and it's just not that expensive. I mean, I think that adding this addition to your, daily routine on reviewing stocks and the markets in general, I think this is definitely the best situation you can have. So these are our price points. If you get both of them, it's only $68 a month. I know so many people who charge hundreds of dollars, thousands of dollars, and that's just not what we want to do. We want to bring our work to every investor. I am an educator. I actually started getting my teaching credential in mathematics. So I want everybody to learn what I have to offer, because my sense is that if you learn what I know, and I think most of you can, then you're going to be more successful, because I'm more successful because I've been using these various techniques. All right, so let's go ahead and get started. This is the free homepage of stockcharts.com. I'm a member, so I get to have this dashboard. But again, I wanted to show this to you just in case you are not a member. There are a few things that you can't do, but the major concept today you can do. I'll show you what I mean. So this is where you want to go. I usually start with a sector summary, because I want to know what sectors are strong just out the gate. And you can do that by, as you saw, clicking the sector summary. This is what's going on intraday, but it's nice to get at least a week's worth to see which ones are leading as far as the week goes. And it's been really rough. We had a horrible day on Tuesday. It's not going so well today either. And so the sectors over the last week haven't been performing well, but this does give us a little bit of a hint that these are some of the sectors we should consider. I will be honest, I wouldn't consider consumer discretionary at all. Right now, discretionary funds for people are very low with inflation. I just am kind of confounded as to why the discretionary sector is doing so well. But it's just one of those areas like tech that I'm kind of staying out of right now because of the way the market is acting and inflation and all of that. So anyway, we've got kind of a look here, but I'm going to go into one of my scans, because I just want to show you my process before I even get to that industry summary. So I always look at the sector summary, and then I run my scans. And again, this is something you can't do as a free member, but you certainly can as a member of Stock Charts. So this is my primary scan. And if you are a Stock Charts member, you can take a screenshot here and see what my actual scan is. This is the only scan that I have provided publicly to everybody. I run about 8 different scans, and the other ones are at this point proprietary to my DecisionPoint Diamonds reports. I don't give them out to any subscribers at this point. So if you've gotten some from me in the past, consider yourself very lucky that you have them. So I just ran the scan, and this is telling me what looks good today so far. So energy, we know, has been an area that we've been getting a lot of action in. Steel is another area I've been watching as well. So we'll just look at Cheniere really quick. But my scan pulled it up because it's got my PMO, price momentum oscillator. This indicator is available on Stock Charts for free. And it's very similar to the PPO and the MACD, has a little bit of a different calculation the way we went about it. I helped my dad come up with it, do the algebra for him. So I get to say I contributed to that indicator just a little bit, but it came up because I have a PMO now that's rising. I have EMAs that are set up the way I like. My fastest on the top, my slowest on the bottom. So that's what my scan looks for, is to try and find not only those that have been in a nice rising trend to put their moving averages this way, but also that I have that momentum piece going. So here's what I do. Once I do my scans and I'm looking at all of these different charts, I know energy is looking good. We just looked at that on the sector summary, and this is an energy stock. So what I do at the bottom, this is really, really important. And again, this is something you certainly could do even as a free member. The only problem is you can't save your charts, etc. But I'm not here to sell you on Stock Charts for sure, because you can be a member of my site without even using Stock Charts, so you can get all of this information that way. So I first compare the industry group itself to the S&P. How is that particular group doing? And then how is that stock doing against the S&P, and how is that stock doing against its industry group? This is the piece that not everybody does. You usually will see a lot of this, but you don't see the stock to its industry group. This is the important piece, because this is how I can find those stocks that are strong within that group, okay? There are certainly, the group is doing well. It has been since the beginning of August. But the problem is not all the stocks within it are doing that well. So you want to make sure you get those strong leadership stocks. And these indicators are one way to do that. So I'm looking at this one. Certainly it's improved its relative strength against its group. So it is a candidate for a DecisionPoint Diamond. This is something that I might present to my subscribers because it has everything going for it right now. Yes, it's down today, but it has this bullish hollow red candlestick so far. So it looks like, we had the breakout and then we're getting the natural pullback to the breakout point, but then I would expect it to move higher after that. So we already know energy is kind of a place we want to nose around in. I noticed that life insurance last week was starting to pick up as an industry group itself. And here you go. It has been performing very well. This particular one is life insurance, but also full line insurance was one that I've been watching. And you can see also that one is starting to outperform. Now, one caveat I do want to make, excuse me, one caveat is when we are in a bear market, we have to do better than the SPY, but we have to do much better than the SPY. You can outdo the SPY and still finish lower. You just didn't move as low as quickly. So you can see that we had this really nice move in the performance of this particular full line insurance against the S&P right through here. But it spent a lot of that time moving down, chopping around. So you really need something that's going to be outperforming in a big way. And one thing I haven't said that's an important thing to note is that half of a stock's price movement is going to be attributed to its sector and its industry group. So you do really want to check this, you want to check this relative strength, because half of your stock's price movement is going to be associated with the stock and its industry, or the sector and its industry group. So it's really important to find those particular stocks that are outperforming in a big way when we're talking about a bear market. So we know we want to look at financials a little bit. We know we want to look in the insurance group. So that's an area. Steel is the other area I've been watching. As you can see, it was starting to outperform, not performing so well now, so I probably would leave that industry group alone. Technology, I'm still a little nervous about. Again, we're in a bear market, but certainly some of these have been outperforming in spite of the market. You can see right here that AEHR, and again, this came up on one of my scans, and this is a public scan, hate to say. But I do have some better ones that call for this relative strength to look a certain way, momentum to be doing a certain thing. So those other scans are really very helpful as well for me. But this one you could use just to give you some basics here. If you're interested in the scan code, I do have links to the article I wrote about the scan. So you can send me an email, support@decisionpoint.com, and I can get you any of the things I'm going to show you, particularly if you are a member of Stock Charts or our website. So this one's looking good. Again, the scan picked this up. So we know that semiconductors themselves not looking so good, relative strength wise. So I would be very careful with this particular stock just based on that, but seeing this really nice price movement, this V-shaped bottom. The V-shaped bottom suggests once you get a retracement of about a third of the pattern, we've definitely done that and moved past. Once you get that move, then you should be expecting a move above the left side of that V. So you should get a breakout. So we should have a bit more upside here for AEHR, which looks pretty good. I'm just not really thrilled with how the industry group is performing. So this may seem a little backwards that we're looking at stocks first from a scan before we go into the industry groups. But like I said, I think this gives me a little bit of a little more understanding of where I want to focus my concentration. All right, so let's go back to the charts and tools page. I showed you the sector summary. Here's what we're going to really talk about today that I think is very, very important. And those are the industries and the industry summary. Now, there are a couple ways to view this. You can view it in a table, kind of like we did with the sector summary earlier. But I think chart view is critical on doing the industry summary. Now, I will tell you that this chart on the left, it is going to tell you based on those industry groups what they're doing. But this chart is my own chart style for industry groups. Yours is going to look different if you're not a member. Yours will look different even if you are a member until you change the chart style for the industry summary. So when let's just go over here really quickly on a different chart, but if you come down here and you have your chart styles, let's see right here, and you add a new one or replace, you want to name it industry summary right here. So you set up your chart the way you want it to look on the industry summary, and then you save it as industry summary. So that's how you're going to be able to modify the chart that you're going to see here on the left. All right. So we know we wanted to concentrate in energy. We know we wanted to look at those financials a little bit. So let's go ahead and do that first. So I want to find outperformers right here. I need to see outperformance. I want to see momentum rising. As I tell my subscribers, I do not purchase a stock unless it has my PMO rising. If the PMO is moving down, the risk level goes up, probably tenfold. So you really want to get in a stock that's at least showing positive momentum at the time that you buy it, because if you're catching it on a decline or you're trying to catch the bottom and you're seeing the PMO moving down, you're more than likely not going to see a lot of upside movement. So very important for that PMO to be rising. And honestly, if I weren't using the PMO and I was using the MACD or the PPO, I would feel the same way. If you've got negative momentum on a stock, your chances become very high that the price is going to continue lower. So you just have to be really careful. If you own a stock, yeah, I will own it when the PMO turns down. But I also have tightened my stops at that point, and I'm really watching certain support levels. So once I'm in, I'll accept a PMO that's moving lower, but everything else on the chart needs to be pretty strong too. So we know the oil equipment services is doing pretty well. It's got that rising relative strength. Integrated oil and gas has picked up, but lately, we're still rather flat against the S&P. And again, we need to be seeing very big outperformance when the S&P is in an intermediate term decline or a bear market, which Carl and I still definitely believe we are in. I think it's still going to be rough sailing moving forward. So, all right, so now we're looking at exploration and production. I don't like this, right? Because you've got the double top forming. You have the PMO, which is topped beneath its signal line. This group does not look interesting. It is showing that relative strength that I like, but the rest of the chart just isn't conforming to my analysis process. I don't like the way the PMO is on this one. I don't like stochastics turning down. Yes, we're seeing some outperformance since the beginning of August, but as of late, again, mostly flat performance. So not one that I'd be interested in. Coal has been very interesting. We had a really big move up on that one, and now it's just falling apart. So certainly not a group in energy I'd be looking at. So we know energy has been really the leader of late. And so we want to be sure to get in the group that makes the most sense. So we know oil equipment services looks good. We know we got a scan result from this particular group. So we know this one probably has the information that we want. The relative strength is rising. It is a little bit flat, just like the others, but that PMO configuration, that whipsaw into a buy signal is very positive. So I'm liking this particular group, and we decided that integrated oil, no, exploration and production, no, pipelines, maybe, coal, no. So we'll look at these two. So oil equipment and services, now I want to know what stocks are in there, because now I'm ready, right? I've found the group, I've found the sector, I'm ready to invest. Let's see what we can find. Well, Stock Charts has this lovely area here, this toolbar right beneath those charts. And if you click on the last one, it looks like a list. It's going to give you a list of all of the stocks within that particular industry group. This one is very big. So what do I do? There's a million stocks here. How do I figure out what I want to look at? So what I like to do is organize by the stock charts technical rank. John Murphy came up with a formula, if you will, that takes into account the trend in the short, intermediate, and long term. He has a couple of other things that he adds in there, but the stock charts technical rank is skewed toward the intermediate and long term. So I want to see one with a nice high rating. It compares, in this case, the Scooter value is compared amongst all small cap stocks. And of all those small cap stocks, when you calculate that formula, TK Tankers is in the top 99.2%. So it's in the top 1% of all small caps as far as participation, and then is also as far as what's going on with it relatively against all of those small cap stocks. So we know that this is probably a good one. But one of the ways I can quickly go through these, and like I said, I want the strong ones at the top for this process. You can go and just hover over the symbol, and that gives me kind of a basic. Obviously, it's just the price. There's no EMAs, there's no PMO. You can't make this different. I'm going to probably be poking stock charts to see if we can't set up our own thumbnail stock charts where I can have my PMO, et cetera, on it. But we can see this one's making new 52-week highs. Tusk is starting to turn down, so I know I don't want to look at that chart. Val, that looks very, very interesting. I'm going to definitely want to look at that. Geeling, Golar, okay, but not great. There's a breakout to new 52-week highs. So I think we have a few we can just peek at right now. All right. So nice rising trend, breakout to new 52-week highs, I believe. I have to get a 1-year chart to make sure. Yes, I think that's a 1-year. May not be. Okay, no, it doesn't look like it. But more than likely, actually, I can just put on a weekly chart. This is something you should look at too before you invest in a stock, unless you're looking at it in a very, very, very short-term time frame, like a day trader or a short-term swing trader where you're in and out of stocks every week. The weekly chart is good to look at, but particularly if you're going into an intermediate term investment, definitely need to look at a weekly chart. So we know this one, new 52-week highs, actually multi-year highs. You can see that the PMO, the weekly one, is doing very well. RSI is very overbought, but and then there you go with that scooter, which looks fantastic. So looking at this chart, we have a nice flag formation. We're now starting up after breaking out from that flag. A flag formation, I love these patterns. It tells you that the next move should be the height of the flagpole. So this one's only getting started. There's certainly more upside to be had here by TK Tankers. So liking that, yes, 2% decline, but has it really ruined the chart? No, not at all. PMO is flattened, but nothing too awful. And stochastics, as long as they're above 80, I'm happy, because stochastics above 80 mean internal strength, meaning you're probably going to see some follow through on your rallies. So I like stochastics for that reason. And when they drop beneath the 80 mark, usually that's the time to get out, if not before. So that is an excellent indicator. Here we go. Group improving. This stock, look at how it's performing against its brethren. Notice even here, when we were looking at relative strength declining for the group, this one had no problem continuing higher. So I like the look of this. This would be a possible diamond in the rough. We wanted to also look at, not Tusk, yes, Polaris Limited. Nice bullish engulfing candlestick today. PMO looking great. RSI is positive but not overbought. Stochastics above 80. And look at the outperformance against this group. This, I told you, is the big important piece. You find stocks that already have EMAs that are set up the way they should be, positive momentum, positive RSI, stochastics over 80, and then you come down and you see this beautiful outperformance against the group on top of everything else. I haven't added it, but I've definitely thought about adding how that stock is doing against the sector. But in my opinion, if it's doing well against the group, it's, I'm sure, doing well against the sector. All right, so let's go back to our industry summary, and I'm going to start from the beginning just so we can reinforce how to do it. So again, free members, you can use charts and tools. If you are a member, you come to member tools and scroll down for your industry summary. But like I said, I'm talking about this for free people to stock charts. Excuse me. So financials, full line insurance was looking interesting. And like I said, to be honest, last week that was going to be my industry group to watch for my Diamond subscribers. On Friday, I do a subscriber only trading room. And then on Fridays also, I recap the 10 picks that I made during the week so that we can see how they did, what maybe went wrong, why did they do what they did. And then I give a sector to watch and an industry group to watch the following week with a few stocks if I find some. Drink of water there. So next up, financials. They're not doing that great in general. But like I said, we know that the insurance looked pretty good. But let's just click through just since we're here and I want to show you how this works. So PMO top beneath the signal line, no. EMA is braiding, PMO top beneath the signal line. Yeah, it's turned up, but stochastics. Financial administration, that's a no. That's a no for insurance brokers, PMO top beneath the signal line. Full line insurance on a PMO buy signal. Stochastics looking a little bit suspect here, but relative strength certainly looking good on full line. Big double top here. I have to say, now that I'm looking at these industry groups today, not liking the look of some of these with these PMO tops beneath the signal line. I mean, it's bad enough when you get a PMO sell signal, but tops beneath the signal line generally lead to a lot of disaster. Here's a top beneath the signal line right here, right in there. So not a good look. Property casualty looking okay. So see, I was thinking, well, insurance must be good, right? Because I had that one from that group in my scans. But now that I look at these actual industry groups, I'm not liking the look here, guys. Financials not looking good. And this is why going through this industry summary is important. So maybe I was really excited about presenting that other as a diamond in the rough from the insurance industry, but now that I look at the industry groups, I don't want to be involved there. All right, so what do I do if that happens, right? Well, we did talk about materials. I was looking at steel, which hasn't been performing, and you can see double, triple top, and then the failure at support. So yes, steel not looking good right now. And really most of the materials industry groups are not. Look at all of these PMO tops beneath the signal line. This is the sign that we are in a bear market. This is the sign there are problems. Now, I've been watching miners and gold mining very closely, and full disclosure, I do own GDX, which is the gold mining ETF. Not particularly happy with it right now, but the PMO is still rising, and we haven't really broken support yet. So I'm holding on to it, mainly because I'm watching the participation in this sector, and so far so good. Let's go ahead and dive a little bit into gold miners. Be careful too on these, because some of these industry groups, I'm so sorry, I've got a frog today. Some of these industry groups have some very low price stocks in them. I will not present a stock that doesn't have price. I try not to get it unless it has price above $10. But if I can't do that, at least in the $6 to $9 range, anything at $1 or $2, I just am not going to do it. And I always warn subscribers that if you do get involved in these low price stocks, number one, be ready for a lot of volatility. And number two, don't buy too much. It's cheap. You could buy a ton of shares. Position size wisely, because you're buying into something that's very volatile. And so as much as you might want to pop in a bunch of money because you can to get so many shares, your risk level has just moved way up just by the fact that the stock is a low price. So always keep that in mind. So we organize this by scooter. And one thing I'm noticing right off the bat is the highest scooter is under 70. So that already tells you this is a beat down group. We need to be careful. That's a dollar stock. I'm not going to look at that. Sand, you can see that failing. AGI, this is one that I like to trade a lot of times, but that looks pretty bad. You know, even these high scooter ones are just not performing much. Oceana looks interesting. Kind of a V bottom. We do have a 520-day EMA positive crossover on the way. PMO looks good, stochastics look good, and here you go. Outperformance against its group. So you like the group? I'm liking the group, even though it's acting a little strangely right now. But if you like the group, then, and you're starting to move in and look at stocks, of course, this is the $1.56 one, but it's looking pretty good. A-Mark is one that I know I follow. It's getting ready to hit some important support here, which it looks like it is today. Not liking these red-filled candlesticks, though. Hopefully you're cool with this, guys. I like to do things real time. That's why I like to take symbol requests. We're in Trader's Corner. I want to engage you with, let's look for stocks. Drug retailers, yeah, we're looking now in staples, and I just don't see much in here. So really the concentration here was energy, and certainly those industry groups look good. I'm gonna go ahead and open it up for questions right now and see if there were any. I don't see any. So if you do see any that come in, just please let me know. Looks like I will have time for some symbol requests. So if you want to throw a few symbols at me that you're looking at, just put those in the question box, I'm guessing, or the chat box, one or the other, whichever one we're monitoring right now. But go ahead and put a few symbols in there. But I'll just run some scans too if we don't get enough of them. All right, so one thing that I did, and I will tell you, you can see all these PMO tops beneath the signal line. You can see the PMO turning up. Back here at the beginning of September, when I was going through these industry groups, I was looking for those pockets of strength. Not any. I would say two had rising momentum of all of these industry groups. All of these industry groups, two had rising momentum, and they had only risen that day by a tiny little bit. Gold miners was one, and oil equipment and services was the other. Interesting that we're concentrating on those two today. So I will actually, if my scans don't produce, I will actually take the time and click through every single one of these groups in order to find the one that I like. If you go through this summary and you find, like I did, with none of the stocks or none of the groups having positive momentum, that tells you something, and that tells you get into cash. So there are no pockets of strength when that's going on. Your chances of finding winners goes way down if none of these groups have rising momentum. So that also is a benefit of doing these industry group moves through. Now, auto's looking very interesting, kind of a reverse head and shoulders setup, but not a textbook one because these are reversal patterns. Let's go ahead and open this chart. So a reverse head and shoulders as a reversal pattern should come after a decline, and we're not seeing that, but it is an interesting basing pattern. So I'm not going to tell you that's a bad pattern. I'm just going to tell you that it's not a reverse head and shoulders, and it is getting ready to hit this overhead resistance here for the autos index. But everything else is looking pretty interesting here. Notice the outperformance against the S&P for autos. Well, if we're going to talk autos, I just know off the top of my head what everybody's going to want to look at. And here we go. Now, isn't this interesting? Does this chart not look almost identical to this one? Like almost identical. That's because this one is capitalized very high. This one is traded with tons of volume. It leads the sector. If the sector is doing well, Tesla is going to be doing well. And that's exactly what we can see back here. And the outperformance is almost exact between the group and Tesla. So if you're looking at autos, you like autos, Tesla is generally one of the places you're going to want to go. This one looks pretty good. I would say, given the market and what it looks like now, I would be very careful on entering here and watching this particular level of overhead resistance, because there's a good chance that this is where it's going to want to turn right back down. The PMO is rising. We almost are on a buy signal today, but it's very flat. So we need to be very careful when we get close to this overhead resistance level. But seeing it doing well today is great. If you got in now, you would get 3% out of that investment just if it reaches this overhead resistance. But if it's going to make it up here into this area, that's going to be a gain of somewhere around 16, 15%. So for those of you wondering how I'm doing this, if you click the inspect tool, you get the crosshairs, and you want to go up and down to see percentages, click and hold, drag. If you want to see how many periods we're looking at, click, hold, and drag sideways. So this tells me over on the very far left in gray, that's 33 trading days. So I find this tool absolutely necessary. So Tesla looking good. I mean, the group's looking good. Maybe we're looking at discretionary where we're not getting, where we're looking at people's disposable income type stuff. But, autos, honestly, to some degree are staples. Maybe not a Tesla, but I know I have to buy a new car right now. I've been putting it off forever, but it's a have to. It's not a want to right now. So you do have a little bit of that going with these. So Ford's the other one I would look at. Certainly not looking as good as Tesla. GM would be another to look at. Certainly looks better than Ford. It's in a rising trend, but notice in comparison to Tesla, we have these EMAs that are not configured very well, but it is a nice basing rounded bottom pattern here. So, but 200-day EMA seems to be the sticking point here for GM. You can see it hitting it twice and then pulling back. So again, we have to be really careful with overhead resistance right now. And one thing that I would tell you by being in a bear market, one thing I would tell you is that all of your investments, most of you here are short-term traders, so this is probably no news to you. But if you are an intermediate term trader or a more longer term trader, when we get in a bear market situation, you need to manage those investments like they're short-term. Just buy and holding, I do that with gold. I will admit to doing that with gold. But other than that, I'm usually an intermediate term trader. But in a bear market, you are now a short-term trader. Just remember that. You're a short-term trader now, whether you think you are or not. You have to manage your investments in a short-term time frame in a bear market. You just absolutely have to do that. And if you're not going to do that, then get into cash because that's going to be your safe haven at this point. At least it's one of those things. You're not winning, but at least you're not losing. All right. So we are in a bear market. I don't think there's any question about that to me. We are holding the short-term rising trend, but I'm not liking the look right now. I don't know that we're going to be able to hold it much longer. Okay, are there any symbol requests out there? Let me see. BBBY, XOM. All right, let's do it. I will tell you to be careful with this one. It is a known meme stock. So you're getting into something that, yes, you could get these really lovely moves, but then you can get these terrible downtrends. I had a reader request for my DecisionPoint Diamonds report of this particular one back on this day, on when it went up very, very high. And I covered it this day with the big filled black candlestick. It couldn't be more negative, couldn't be flashing sell, sell, sell more than this particular top. And I told that reader, because he didn't know, that this is the new meme stock, apparently. I have stepsons that are into the computer, Reddit boards, all of that stuff. And they keep me up to date on these. And they had told me Bed Bath & Beyond was like the new one. I don't like the way anything is set up on this chart. There's just nothing good here. Yes, we have some relative strength against the group, but the group, well, it is outperforming slightly. When you see this kind of performance against the S&P in a bear market, it is rising, but more flat. It's telling me that this isn't a good stock. And I'm also looking at, let's get the thumbnail in here. I'm also looking at this candlestick with the giant wick. This looks a lot like a shooting star, and it's coming right at that overhead resistance. So not a fan here. Certainly, if you were looking at it as a short, I think you could make a case for it. But not a fan here. XOM, we've been talking about the energy sector, so it makes sense to go in here and look. Excuse me. And yes, if you have questions, certainly let me know. Erin, is there a way to measure the company's degree of correlation to its industry? Certainly. The relative strength is certainly a really good way to do that, but you can adjust this from being a relative, where you put the industry, the colon, and then what you're comparing it to. You could also change this to a correlation. So this will correlate for a 20-day moving average against the S&P. And there you go. Here's your correlation. So that's one way you can do. It's not relative strength, but it certainly tells you typically how does it do, when is it going with the market and when is it not going with the market. And right now it's at 0 practically, so it's not going with it, not going without it. It's kind of a wild card right now on XOM. I do like this area, but remember, you know, and we've got oil and equipment and services. Wasn't that the one we were looking at? Now I gotta go back because I want to make sure, because this one clearly is not a winner in that group. Yeah, we're looking at integrated oil and gas. So again, this group not doing very well. So I already know that there's problems going on with this particular stock. We want to look at oil equipment services. That seems to be the one leading this particular sector higher. I don't like this one. We've got 2 PMO tops beneath the signal line. I mean, 1 is very bearish. 2 is extremely bearish. We have a double top. We have stochastics topping in negative territory. We can see here that it's not performing as well as its group. And the group, as we were talking about earlier, kind of performing in line with the S&P right now. So not a fan of XOM, but you were correct, honestly, in requesting this one, because if you're buying XLE, the sector, I mean, you're buying Chevron and ExxonMobil because they hold the high capitalization within there. So if we look at CVX, might as well. There we go, another integrated oil and gas. Doesn't look as negative as XOM. You can see that this one's actually starting to outperform its group a bit, outperforming the S&P a bit. So if I were going for, you know, pick one or the other, I like to do this or that. That's one of my favorite things to do in my trading room. If you give me 2, I'll tell you which one I like better. And mostly because of what's going on the chart, certainly, but this is a key factor in me determining that. Let's see. PBJ, I love the name of it. Food and beverage, I love it. PBJ, that's awesome. Now it's making me hungry. All right, this one looking pretty ugly here. Oh my goodness. Drop beneath the 200-day EMA. Filled red candle, filled red candle, filled red candle. This one is just, momentum is just is swiftly moving to the downside on this particular ETF. Not something that I would be interested in. Honestly, if I owned it, I would not be owning it anymore. I think you've got more downside that you're going to experience on this one, at least down to this support level here, and that's another 2%. And the strength, the strongest support level is going to be back down here, and that's a 3%. And if you're unlucky and it moves down here, that's 4.5. Your risk factor is now between 4 and 5% loss left to go. So I would certainly not be owning this. I don't think that I would be buying this. All right. Do you review double inverse funds? I absolutely do. The SQQQ is one that I have looked at before. SDAO is the other one I've done. So it's not on the website. It doesn't tell you because it's a new thing. But with DecisionPoint Diamonds, on Tuesdays, I give you 3 stocks from wherever. This week it was, where were the stocks from? Which group? It was Marine Transportation, I believe, was what I did Tuesday. That's what I'm looking at. So that was kind of where I concentrated. On Wednesdays, I have ETF day. So if you're out there and you're not really a stock trader, I've added ETF day where I'll give you 3 ETFs that are looking good, and I will present inverse ETFs. I prefer not to go with juiced ETFs, the ultra ETFs, the 3 times, 2 times ETFs. But if they look really good and I don't see anything else that looks good, I will certainly post it. But I always give warning And you should remember this, that those inverses, the risk is very high because you're with those 2 and 3 times. Really, these are set up to be simply as hedges against what you have in your account. These are not really trading vehicles per se. These should be used in conjunction with your overall portfolio. So that's kind of how I look at these. And if the market is doing just terribly, then certainly this is a place you could go to get a pretty good hedge without having to buy a bunch of things or short a bunch of things. You now get that 2 or 3 times inverse on the market to help you hedge really easily and very quickly. Obviously looking great. This is a reverse head and shoulders. Head, left shoulder, right shoulder, and it's coming off of a decline. So that's a textbook reverse head and shoulders. The neckline is right across here. So if we get that breakout above this level, which we certainly could, given how bearish everything looks, if we get that breakout, the actual upside target of this particular pattern is the height of the pattern. And that's your minimum upside target, which would take you certainly to this area of overhead resistance. So it's looking pretty good right now. Bottom above the signal line. Like I said, I'm very bearish on the market, so certainly a good place to consider a hedge. So I do those. Oh, let's see, puts and calls. I don't do options. If you are an options person, my colleagues over at Simpler Trading do an amazing job at options. They're far more expensive than I am, but it's just something I don't do. Stephanie, you're awesome. She is here and followed me into this presentation, and it's so appreciated. My subscribers are here to tell you how awesome my products are, and I just really love that you come in and support me all the time. Devon Energy, exploration and production. Again, not an industry group that looked that great. Certainly it is outperforming here. This particular stock is outperforming as well against the SPY. So it doesn't look too bad, but the indicators just look really soft. I mean, stochastic's topping below 80. It's just not the kind of look you want. Okay, we are getting close to the end of my time. We have about 2 more minutes, so let me go back and to my PowerPoint, which I did say is pretty weak here. I apologize for that. And we did look at that. So if you wanted to join me in my free trading room, it's noon Eastern on Mondays. Carl is now in the trading room to answer your questions. We have him look at the market, give you his opinion, and then I go into looking at the sectors, the industry groups like I did today, and then we pull up symbol requests. So if you want to do that, that's on my homepage. I showed you where to do that. And I can't come to one of these and not offer a great deal to all of you who are not members. And this one is being brought back. I only offered it for about a month and a half to everybody in the public. I closed the code out. I have opened it. People don't know I've opened it. So you can get 50% off your first month. Actually, no, Bears is better than that. The Bears, you get your first month for $14. That's right, the Bears code, you get coupon code Bears, you will get your first month of both reports, one of the reports, however you want to do it, for $14. I mean, if this is at all interesting to you, I don't see why you wouldn't want to, give me what you'd probably pay for a McDonald's meal this month. So give it a try. Most of my subscribers pay for their year with 1 or 2 good trades from diamonds. I'm sure they'll tell you that. So it's excellent. Lots of symbol requests I saw in here that I didn't get to, and I will do symbol requests on Monday. If you do subscribe and take advantage of that $14 this month, you can join the subscriber only DecisionPoint Diamond Mine on Friday. It's an hour and a half, and I usually get through every single symbol request. And we also do a lot more. We do that sector to watch, the industry group to watch. We find those stocks. It's the diamond mine. So get that $14 on the Bears coupon code. Join me in Friday's